Hey traders, Park here with another video on where the money is flowing. What I realized this week is simple. The market is going higher, but it's not moving together. And what I didn't understand before is that when that happens, direction matters less than selection. Right now, this is not a trend market. This is a dispersion market, as you can see from the indicator right here. And you see right now, technology is what's really leading everything, and that's especially because of the AI trade. Let's start with the data right now. The market regime is in transition. Basically, the regime is transitioning. You can see energy is weakening. It's turned into a weakening category for our RRG, relative rotation graph. XLB was over here in the leading with the XLK, but right now XLRE has moved over there. This We have a mixed structure just because of the regime change. Volatility is stable. You can see from here, normally the VIX would be gold or yellow right here, but it's orange showing it's coming down. I think the VIX is below 20 now. The trades bias right now for us is long, but it's going to be selective names. And really, we're going to focus on the ones that's in our leading category, but we're also going to be looking at XLB as well. We don't have anything in our improving, and that's based off of our anchor date of the first of the year and a 21-day moving average, relative moving average. Basically, the sectors minus this 5% change. That combination tells you everything you need to know. This is not a clean strength. This is not broad participation. This is capital movement with precision. If you just look at price, you would say S&P is pushing high, NASDAQ is leading, and the market is strong. So we can see right here the S&P is leading everything. Some of the indicators I have on here right now, the clouds represents the move averages. The move averages I'm using is 21 day, the 42 day, the 63 day, and I believe the 82 or 84 day. But that just represents 4 times 21 days. So it gives you roughly a little over 3 months worth of data there. This white and yellow cloud represents the 21 and 42. That's basically giving you 2 months. And then the bottom of this red cloud, let me zoom in, represents the 63 and then the 84. This other big thick red line right here is the 200-day move average. And we say we had this huge push up against that. The other indicator that we had that's on this chart right now is our anchor VWAPs. So you can see these are current anchor VWAPs. These dashed lines are our previous or our carryover anchor VWAPs from the previous 1 month, the 3 month, the 6 month, and the year. And you can see the SP 500 came down to our carryover from the previous year VWAP, right down here, and act as support. And you can see right now our current VWAP is this dotted cyan line right here. And you can see where we really just pushed above it for the month of April, and then the dash line that's underneath this red line, our 200-day move average. Which I thought that. Let's see what happens. That dash dotted line is our previous month, so that would be March's carryover VWAP from March. And then our pink dash line right here represents our 6 month and our yearly. You can't see the yearly because it's under the 6 month, but you can see the previous 3 month line is right there. Carryover VWAP is there as well. That's what this yellow dash line is. You can see where we're all above all those VWAP levels right there. And you can see right here, we did make an all new time high for the S&P 500 on Friday, but you can see we're facing some resistance here. We got to close above here, but everybody's really waiting for this weekend to see what happens in the Iranian war, Israel, and the U.S. and oil prices and everything. The other thing you can see down here, my our relative volume indicator, saying risk on. You have the volume for this day. You have the average volume over 21 days, and then you have your buying percentage on that bar and your sell percentage on that bar. And then the average difference for these last 21 days is 31.36%, and that's in the buyer's favor. But you can see right here, one of the things I've noticed was the average volume is trending down, and also the volume itself is getting lower and lower, and that just indicates possible consolidation here within the S&P 500. So we're going back over here. We can break it down a little further. Small caps are inconsistent, breadth is weakening, most sectors are not participating, so the move is real, but it's concentrated. And that's where most people gets things wrong. Looking back, here's the mistake. I used to treat the market like one big thing. If it was going up, I assumed opportunity was zero, but that's not how this works. The market doesn't move as one. It moves through rotation. And right now, that rotation is tight. Where the system is obvious, the leaders right now is energy, technology, and real estate. And real estate, I wasn't really putting one and two together, but it represents partially the AI infrastructure. It's just not housing, just not what I used to think about it was just housing, things like that. But it also represents they need different places to build their AI infrastructure and what else? Data centers. One of the things that's big in my area is Amazon is building data systems, and Tesla is building data systems in my area, or at least they're trying to. And then Tesla is trying to build a battery station here as well. The laggards, as you can see, is consumer staples, communications, healthcare, and you can see the breakdown underneath. The software is still weak, biotech is weak, broad participation is fading. So that isn't random. This is a targeted capital flow. The market is making new highs, but fewer stocks are driving it. That's called narrow leadership. And historically, that's not confirmation. That's early warning. Not a signal to panic, but a signal to be precise. So with this, everything you're seeing on the screen, yeah, I could take a lot of these different things off, but I wanted you to see all these different areas. And one of the other things with the AI infrastructure is copper. Copper is still pushing up. What else is still pushing up? Utilities are going to keep pushing up, and basic materials is going to keep pushing up. And XLK is really really represents the materials needed for the technology. So volatility is stable. That's important because it means no panic, no forced selling, no breakdown yet. But here's the part people ignore. Low volatility with weak breath doesn't mean safety. It means the market hasn't reacted yet. And that's why I'm saying we're waiting for this weekend. And all throughout these next week and following weeks, we have earnings. We can see what Tesla had a little rough on their earnings. Tesla got hit kind of rough on their earnings, but they came back to actually came back to their 1 month VWAP, and they're struggling between the carryover VWAP from March right here in this center right here. And we can also see these VWAPs right here where it came into the yearly VWAP and the 200-day move average and the 89 and the 63. 63 represents 3 months worth of, or quarterly average as well. You got high volume, but right now Tesla's in transition. It's trying to decide where it's going to go. One of the other indicators that's on here that I need to pull back. Yeah, I need to pull these back. I think that's the only one that, just because of the bubbles, but I wanted to put the earnings and send the VWAP on here as well. We have our earnings here. You can see they had earnings on 4/22, 62 days into the next earnings. It was showing that they had earnings, the earnings versus, this is expectation versus actual, but it's not there anymore. So we have a neutral score. So if I were to, yeah, let me hide that as well. So these lines now represents our VWAPs. These are earnings VWAPs. And you can see this is from that fourth quarter earnings. Here's our third quarters and second quarter, and this is our first quarter earnings now. So this is where this current VWAP is, and our close, I believe, is below that VWAP. But you can see right now we actually ran into our fourth quarter VWAP from that previous fourth quarter. That's with this dark blue line right here. So these are some ranges also. So this is the range from the actual earnings move. And you can see right here. So we had, it just finds the highest high, lowest low for these 2 days from when earnings hit. And you can see we're stuck in this range. And these are just, these other levels are extensions from this range. So this dash line right, this solid line would be one full range. This would be two full ranges, and these lines in between are midpoints of 0.5 between the ranges. You can see right here from my previous earnings right here on Tesla. You can see right here once it made this once the actual earnings hit, it created this range from earnings, and you see we basically just drifted that below. And once it really got below that VWAP, it really just came down, and it actually came all the way down to, what is this, 1, 2, 3 times the range of the quarter of the earnings range. And it came down here, and it pushed back above, and it came back in here, but it really couldn't get back above that VWAP. That's just one of the indicators that I wanted to show you that I use as well. I'm going to hide that one. I'm going to get our anchor VWAP back on here, and we're just going to go from here. Yeah. So we'll go from here, and that was just one to show you Tesla. QQQ, we can see the same situation there as well. But let's call it like it is. So this is high dispersion. That means some things are working extremely well, most things are not. Direction alone won't pay you. This is not about being bullish or bearish. This is about being aligned with what's happening. So we're basically trade bias already defined as being selective long. That's not a suggestion. That's consistent. So what does that mean? Focus. Leaders only. So we're going to focus on tech, energy, and infrastructure. That's what I mean by technology. Technology also represents the infrastructure for the XLK also represents the infrastructure for technology. So strength on pullbacks, avoid breadth, index exposure, weak sectors, catch-up trade. One of the biggest trades that we were looking at was Intel, INTC. And you see where it had this huge breakout on earnings, where it went from basically 66 up to 85.17, and it carried AMD with it. AMD is at all new time highs. It's never been this high before, but it all time highs as well. So then the other thing is just managing your positions if you're already in these different things. Risk exposure and expect shorter moves. Just because, like I said before, when we looked at the S&P 500, we saw that some of this stuff, the volume is decreasing, and the average is going down as well. You don't need to predict anything here. Everything you need is already showing up in price. That includes micro pressure, earning expectation, geopolitical risk. Price reflects all of it. Your job is not to guess. Your job is to read and respond. And that's why I'm saying a lot of this stuff we're waiting for Monday to see about the war with Israel, Iran, and the U.S., and oil, and also the different earnings plays next week. So looking back, here's the principle. The market doesn't reward being right about direction. It rewards being right about positioning. And right now, there is opportunity, but only if you're if you're precise. So going into the next week, watch for the leaders, ignore the noise, and stay in line with where capital is actually flowing. That's the edge. And one of the ways that I do filtering or scanning through different stocks, I'm looking for anything that's greater than or equal to is multi-day anchor VWAP, the yearly VWAP. That's why I'm saying this. You can't see it here just because it's underneath our 6-month VWAP, but it'll be a red dotted line as well. And this dash line represents our previous or our carryover year VWAP. So here's a scan. So I'm looking for any stocks. I really should have that above 10. But anyway, with million volume, at least has one share. The close is greater than its current yearly VWAP. The simple move average of 50 is greater than 200 day. And then we're gonna scan. And these are the results that we get. The market difference is basically based off of the same thing that our momentum is generated off of. So it's the stocks percent change minus the S&P's percent change based off of 21 days of momentum. If you don't know what I mean by momentum, I'm basically using this indicator inside of the scan. And that's basically what this indicator does. It's saying price minus price at a certain length. So whatever your length you're using, it's looking at those days back or whatever length back and using your current price to using your current price against it, or using the difference between your current price and where it was for this instance 12 periods back. But I'm using 21, and that's where we get our somewhat our relative strength according to percent change. MXL, this one's way out there already. MXL. I wish I was on it. I wish I was running my scan better. I would have been able to catch this one, especially it crossed above its April's VWAP right here as well. And you could use, if you get this VWAP, anchor VWAP indicator, you can run those scans as well against your monthly VWAP. You don't even have to have this scan right here. You can just use regular, you don't have to have this indicator. You use regular VWAP and just look for anything, scan anything above its monthly VWAP. Thinkorswim's VWAP, that's what it goes to. VWAP. Yeah, Thinkorswim's regular VWAP. I got so many VWAPs on here. So if I open it up, it goes all the way to the month. So you won't be able to get you won't be able to get the quarterly, the 6 month, and the year. But if you get my indicator, you can get the other ones as well. And this one's a huge breakout. It's way above. It's beating the S&P 500 relative strength wise. On the market's relative strength is 74.25%. And then we look at Poet. It was mentioned on Kramer, I think Jim Kramer show, and it broke out from there. But it had already crossed above its monthly VWAP, and we can also change that script as well to look for anything above its monthly VWAP as well. But I wanted to look for something more so long term. And you can see it broke out all the way to 15. And where's the yearly VWAP? So yearly VWAP was right here. It actually got above, retested it, and it basically pushed up from there. So we can go to the AAOI. I believe this one, it has something to do with the optics. So this is not the leader in this section though. So AAOI is going to be moving off of light. Light is the leader in this section, and I regret I was in this stock at about $200 some. I want to say 205, and then I sold it probably when it got up here. When I seen it couldn't break above, I should have just stayed into it. There was no reason for me to get out of it, but just taking profits when I seen it couldn't break about out of there. But this is our yearly VWAP right here. And you can see where it actually, if I've been running my scan for the year, this has been one of the stocks I've been paying attention to, especially with the chips and everything. They need these different optical lenses or whatever to run them. MaxL, this is what MaxL does. AAOI, and that's what it does. It's outperform long. LITE. It's a couple other different stocks out there as well that does the optical names. I had a list, so I think it's AXTI LITE. That's the one we're looking at. GLW. So there's optical communications. So some of the other ones was CIEN. And like I said, LIT is the leader in the sector. UI, COHR, FN, VIAN. I might have that wrong. VIAV. So, but the one I'm currently in is this one right here. Just for what they say, full disclosure. This is the current one I'm in. I was initially in back here when it finally broke above 80, but it just continued on from there. Let me get rid of my drawings, and we can see it clearly with the indicators. This is what it looks like with just the indicators only. And you can see this is our current month's VWAP here. This dotted line right here, this same dotted line. This dashed line is our previous current carryover VWAP from last month. You can see where the 21 days above the 42, so that's 2 months worth of data. And then we have our 63, and then we have our 84 period move average right here, this bottom of this cloud, and then we have our 200-day move average, and that's our this white dash line right here is our chart VWAP. So whatever length of chart you have on is going to find that VWAP for that for that length right there. You see our carryover 6 month is the same as our carryover 3 month, a quarterly VWAP is the same as our 6 month right here, but we made a new quarterly VWAP as well. And you can really see that transition in the quarterly VWAP when you transition from one month from the end of quarter. So those are some of the optical names. We can go back to our scanner, and the scanner, we're looking at scanning all stocks, and we're looking for information technology. If you don't know how to run the scanner, basically I came down here, I went to information technology, I looked for all of them. This gives you the industry, and this is our name, our sector, our industry. You can see the last price, the percent change on the day, and this is a percent change on a week. And I had a yearly percent change. I don't know what I did with it. That spike is just percent change over again. This is our seasonality. So if you're looking for a seasonality play, so these are the ones that are usually up for the month of April, and 70% of the time they're up. Why is it not? Yeah. So let's make this smaller so we can read that. We can make this one smaller. That's smaller. And this is just my precision range indicator. Let me know if it's still in the range I was looking for. It has 10 years. These ones have 10 years worth of data. They all everything has 10 years worth of data. So 70% of the change is up 4.43% for the month of April. So if you wanted to look at these on a seasonality basis, there you go. The difference between the market, you have this information right here. If you wanted to see if they were in my precision range indicator or outside the range or close, this is a recent breakups for the precision range indicator. Closes above my range indicator. The precision range indicator, and these are also in the range. And it's in the range, but it's below the 50 midpoint of the range. So these are recent breakouts for my range indicator. VSH. So this is a recent breakout. Do I have the precision range on here already? These are a lot of different things that I'm either working on or researching. Let's see if I can find the precision range indicator. One of the things I didn't realize, I had my precision range indicator, or at least I had the watch list column set for 10 minutes. So that was going to be inaccurate, and we can see it here, that this thing broke out on the precision range indicator here on 410, and it's been pushing up from there, pushing up ever since. So this would be another candidate possible for a pullback, and you can see right here we don't have a strong close in this area right here. So let's go back to the scan and let's see some of these breakups. HIMX, it doesn't have a strong seasonality, but it does have earnings coming up within 9 days. So HIMX. And here's our breakup for my range indicator. So it's using this low right here and this high, and it created the range from there. But our ZAR is bullish right now, and we're pushing above here. So I'm gonna set an alert on here to create me an alert above. I'm gonna say 1250. If it's gonna continue above the range, and I have 50 cent worth of risk if it comes back to that level. It looks like I looked at this stock before a while back, and you can see right now 1391 is a resistance level for this stock. Excuse me. But go back into our scan, another breakup. L path, light path. I believe I played this one too. LPTH. Here's this breakup. So it's basically been in consolidation ever since the beginning of the year. So 123. It's just been in consolidation and finally broke above this range. So we're looking at 1653. I'm gonna look for it continuation, possibly 16.75, and I'll make a decision from there. And possibly, it possibly could come back to 1524. But we can see it broke out of this range on strong volume. It had earnings here. When is his next earnings? So it had earnings in 14 days. So we can look at it from there. And let's go back to the scan. These are all these greens right here. It's showing the out of the range. The close is greater than the range. These right here, they're showing they're still in the range. So these are possible plays right here. We had AAOI already on here. And you can see where it created a new range here. And we're looking for a breakout above 173.41. And I want to go some of the sectors as well. So we can see the SPY as well. It broke out of its range from here. You can see when you were using precision range indicator, you could have caught this breakout, or you just use the range when it got back above this 50% retracement from the recent range high back here. QQQ, same situation here. It found this range here from these highs right here and this low, and then you can see it didn't have a strong breakout of this range, but it did the following day when it basically, in that one sense, gapped up, but it kind of traded within this wick right here, and it's been continuously going on. But this this full line right here represents our range VWAP, breakout VWAP. And you can barely see these dashed lines, but these dashed lines represents our previous range, and it actually acted as resistance as well. If I remove that was a previous range high right there, and you can see where it acted as somewhat resistance right there before the stock broke out, and used it as support on a continuation breaking out. Let's go back to that scan, and these are a lot of ones that are outside the range. Let's go to some of the ones that are inside the range but have good seasonality. This one's up usually 70% of the time. So RNG. So just taking a look around. So RNG, you can see where it came back. Tested its yearly VWAP right here. Pushed back above. Got back above its monthly VWAP for the month of April. And possibly could have a breakout of $42. It has earnings on this day. So 5/7. So possibly, what is it, next week or week after next? It has earnings. And possibly breaking out of 43. I don't know anything Ring Central. I don't know anything about this RNG. What do they do? Ring Central. cloud business communication service provider, deliver tax center workforce. So, and these are the ratings for this stock. So long outperforming, then the other one's basically telling you to be cautious with it. I don't know a whole lot about this one. I haven't heard anybody bring the name up either. Try to break out a range here. With this high, couldn't break out, so you want to confirm close out of this range. Going back to the scanner. Let's see, those are the ones back in range. Information IT services. I don't have a good relative strength versus the SPY. So GDS, we'll look at it, but GDS is stuck in a huge range. Basically, it's been in this range from $52 all the way down to $16, and it's basically been trending up from there, but it's in this consolidation. So these clouds represents Fibonacci levels. So this would be 78.6, 61.8, 50, 38.2, and I use 21.4 for this one instead of the other Fibonacci ratio. So, but we will look at some of the other ones that are outside the range. This one has Rambus. Oh, that's Kenny Glick's stock. If you don't know Kenny Glick, he's a trader as well. But it has 1 day for earnings. So RMBS, Rambus, and it's already broken out and basically it's been a rocket. So it was in this range right here, and you can see where it actually broke out of the range. It's above its yearly VWAP, above its 200-day VWAP. 200-day move average. All of the move averages have turned bullish as well. The long-term move average never did turn red. It turned red here, but back here, in this area is always green. Even moving through from there, it turned green. That's a 63 over the 84 move average. And you see where it's just been pushing up here. So it's basically a run up into earnings at this point. It has earnings, is it Monday? 427. So that's something to look out for. I'm looking for something like this one. It has ANET. It's 7 days to earnings. Or we can look at this one, UMAC. So we'll look at ANET first. It broke out of this range, and it has a couple of days into its earnings. So it could be, you could play as an earnings run up into its earnings. So it was in consolidation from these different areas, and basically it's pushing up from there. And this is basically the precision range indicator showing you the different things right there. But I think that's our previous midpoint. So yeah, that's our previous midpoint. The previous range, this purple line, dash line, represents the previous range, and this is the previous range high, previous range low, previous range mid, into this new range. But anyway, it's above all the different levels, and it's pushing up. I don't know what ANET does, so we can go to analyze. Network, engaged in development, marketing, sales, data-driven, client, cloud. So cloud, basically cloud play. But where's the one I said? Wait for this to come up real quick. Here's a UMAC stock. You can see where it basically traded between these. This is the past range. I guess how much volume does it get? 2 million. So I don't like all these gaps. But anyway, this is a gappy stock right now. I actually had a breakout, but it had a rejection from this area, so possibly a pullback into another breakout. But it has earnings within 3 days, so it's a candidate for me. Let's see, it's trading right now. We will put on here, let's say 1250. Possibly, if we get back above 1250, it could possibly break back out and have a continuation, but I wouldn't stay in it for its actual earnings on this one, and it gapped down. But one of the things I should have done was look for anything with an ATR above $1 or $2. We can look at some of the other ones. We can go look for the other industry was real estate. And we can see this is what real estate looks like. It's pretty bloody for the whole week. But we're just gonna look at the ones that's trading better than the S&P 500, and it looks like GLPI, supposedly doing better than the S&P 500. It's in this range. It just had earnings, so it could possibly move up. Gaming and leisure, PPT. It's a REIT. So I don't know about this one. It doesn't. It gets about 2 million volume. At least, yeah. Happy to get in and out. Possible breakout from this area. Possible retest of 49. We're gonna leave that. We're gonna leave those real estate stocks alone. We're gonna go back into materials, and we're gonna look at this one. And let's go back over here. So technology is number 3 based off the percent change right now. XLE is still our leader, so we're gonna look in that one. And let's see, go back to the scanner. So these are the ones are doing better than S&P 500. Let's look at this one right here, CC. And it's actually trading outside our range. It had a breakout here, or you could say it consolidated into this high, right, into our previous range high, and it finally broke out from there. Our yearly VWAP is down here, and you can see our 6-month VWAP is all trading. I mean, our 1 month VWAP right here is all trading above our previous monthly VWAP is down here as well. So, and it has great volume on here. I don't know if it had news here, but it has earnings scheduled coming up on 5/5, 5/6. CC Long, Chemours Company, Performance Chemicals in North America. Their chemical company. So this is basically a scan for this sector right here, and these are the ones that are doing better than S&P 500. Here's your seasonality plays right there. But we're gonna go look at the other dominant sector. Well, the main dominant sector is energy. So we're just gonna look over energy. We're gonna scan here, and we're gonna bring this video to a close. And like I said before, if you haven't already, please like and subscribe. And so you can get these videos and you get these trade ideas as well. So we're looking at this breakup, BKR. So these are the ones that are all doing better than the S&P 500 on a 21-day relative percent change average. So BKR is a breakup, has a break above the range. Has earnings, and well, it probably already just had earnings. So BKR, and one other thing, so it's an energy, and it's energy equipment and services, and analyze BKR provides portfolio and technology and service engine chain, blah blah. So it's a good play. It's a good candidate for next week if you're still playing the energy names. So it's been trending over energy as well. It pulled back with energy, XLE, and it just had this breakup. So I'm gonna put instead of I want it above $70. I wonder what's its highest it's ever been. 80, $100. So $100 is high as it's ever been. It had some type of collapse over there, and we can see this breakout. It's above our yearly VWAP, above our monthly VWAP, and it's breaking out this range as well. So I'll be looking for that one. OBE, oil and gas consumable fuels. OBE. And it's already broken out. You can see where it's just trending up, and it's $13. I wonder what's the highest it's been, but it's been basically trending up since the year as well. It's above everything. So what's the highest this thing ever been? This is our weekly range. So this thing once was, no, it went through a split. So on the weekly range, so Obsidian Energy. So I would look for this one. Let's see if it's above $14 and possibly continuation. And those are our scans for these different sectors. These are the ones that are beating the S&P 500 on 21-day relative percent change basis. You can look through these. You can see the different seasonality if you want to see it on a seasonality basis for the month of April. These are the best ones seasonality. These are the ones with the precision range indicator. These are recent breakups. These are the ones that are above the range. These are the ones below the range, in the range. Precision range indicator, change on week, and these are different things right there. But this is going to be the end of the video. If you haven't already, please like, subscribe, and if you're interested in the indicators that I've demonstrated on this video, just use the link in the description to get any of them. I appreciate you guys taking the time to listen to what I had to say. I hope it was helpful. I wish you the best, and God bless.